Hello. The big question right now is, are we in a buyer's market or are sellers still holding the cards? Let's look at the data and see what's really happening. Gosh, Eric, I've seen some national headlines this past week that have me a little concerned. Homes are sitting longer than any point in the last decade. Nearly 1.5 million homes across the US have slashed prices. That's 1 in 5 listings saw a price cut in August. That is the highest since 2016. The median time on market is up to 60 days now. That's up 7 days from last year. Existing home sales stuck around 4 million annually. That is way down from 6 million in 2021. Eric, we've got 22 months of straight of growth. And now we have over 1 million active listings. The South and West metros, you're talking about Miami, Arizona, Texas, Cali. Miami itself is nearly 10 months supply of inventory. 10 months supply of inventory is what we had in 2006, 7, 8. That's during that crash, right? And Metro Detroit is really not any better. If we look at Metro Detroit, we had nearly 3,400 listings hit the market in just the last 7 days. So 3,400 new listings in just Metro Detroit last 7 days. 2,700 price reductions. The sellers are coming down fast. They're adjusting fast. They're making their price reductions in week 1 and in week 2. We saw 2,800 homes sold last week, but we only had 2,200 pendings. So only 2,200 went under contract. So think about that for a minute. We had 2,700 price reductions and only 2,200 go under contract. So we had 500 more price reductions than we did accepted offers last week. It's not keeping the pace with the supply, those pendings. We need those pendings to go up to start clearing out the supply. Otherwise, our month supply of inventory is just going to keep rising and rising and rising. And this is really staggering. So 838 homes expired in just the last 7 days. I haven't seen numbers like that for, gosh, I don't know, 10 years, a long time. It's a huge sign of overpricing. Our year over year inventory is up 14%. That's the highest in 5 years. Our year over year inventory is up 14%. So this inventory is just stacking and stacking and stacking and stacking, and it's getting a little difficult right now. So all that being said, this is the odd part. The median price is still up double digits. It's over 310,000. I mean, that being said, the momentum is slowing. The condo market is just kind of getting rocked. I mean, it's like inventory is up 21% for condos. So this market is definitely shifting in real time. And I think a lot of it has to do with the interest rates. I'm not going to talk about the interest rates. I'm going to let you, talk about this nice drop that we had a week or two ago, and tell us what's going on, man.
Yeah. And you know what? Where are my buyers at? That's really what it comes down to. Now, I think there's still people out there that are listening to CNBC and whomever else it is, and they're getting a false sense of that this market is just going to tank. And realistically, it's not. It's almost not possible because the number of buyers sitting on the sidelines right now still far outweighs the number of sellers. However, people are waiting for some sort of catalyst, right? And what is going to happen is we are going to reach a tipping point. Now, the Fed brought rates down, and we had mortgage rates decrease almost to the level that they were in September of last year, which is the low for the last 3 years, really. Now they are right about back there. And the trends that are going to help them are, one, we all hate to see this government shutdown, but historically, government shuts down. I mean, the last time we had a full government shutdown like this was 2013. And the Congressional Budget Office estimated that it hurt our gross domestic product, like the whole budget for the US, by about 0.5%. It was only shut down for 16 days. So this is a major impact to our economy. And again, will be a driver pushing us into recession that will help mortgage rates come down. Now, that being said, the other factors moving into this, we have had negative job growth for 3 months, 3 out of the last 4 months. Now, ADP came out with their so government shutdown. Bureau of Labor Statistics, they're one of the departments that are shut down. So what are we defaulting to? If you're looking at the bond market and mortgage rates, we're going to have to default to probably a better precursor of what's actually happening in the economy anyway, which are the private firms that are publishing data. ADP said we lost 35,000 jobs in the month of August. They also took their month of July, where initially they had thought they had created 50,000 jobs, and revised that lower to saying we actually lost 3,500 jobs in July. 2 months before that, we lost another 50,000 jobs. The jobs market is tanking, and it's tanking quickly. That is going to continue to drive mortgage rates down. Now, with all that being said, with our government shut down, you're going to have limited data coming out. So what's going to happen is I believe we're going to continue to trend. Rates jump back up. This week, they're slowly trickling back down in lieu of lack of economic data because of the shutdown. And I think they're going to keep going that way. What is going to be the catalyst, or where the smart money is going to go, is getting out ahead of this, because we're going to hit a tipping point, and it's probably around that 6% interest rate market, where people are going to jump back in. They're going to jump back in hard and fast, and you want to be the first one to market. Again, I know realtors have been saying it, mortgage people have been saying it for industry, or for 3 years now. You want to be on the front end of this. You do not want to be on the back end when all of a sudden we're back into escalating multiple offer situations. But right now, it is absolutely a great time to be a buyer in the market. And I can't emphasize that enough.
Yeah, I totally agree with you, man. I've been talking to a lot of colleagues of mine, agents within the office, and also top producing agents that I'm friends with in the local market. And we're all, echoing, where are the buyers? Where are the buyers? It seems like all the buyers have left the building.
I'm with you. I mean, my last 4 deals, we've gotten maximum concessions on right now. We haven't seen that since 2019, 2020, before COVID, right? Where you can actually get concessions helping pay down your rate, pay for closing costs, do things that you wanted to do, because houses are sitting, and sellers, quite honestly, we're not back to what I call a buyer's market, but we are back to a balanced market to where there's some give and some take. Now, there's still houses that, hey, if they're priced right, they fly off the market on the first day, but it better be priced right. It better be in immaculate condition and just ready to move in. Yeah, you might get offers on that. But for everyone else, if it hasn't sold in that first week, you need to really reconsider your pricing strategy and realize that we are not in 2022 anymore, or 2021, or 2020. This is 2025, and it is a completely different market.
Yeah, 100%. It's balanced. It's balanced. This market is balanced. I just listed 3 this past weekend. We had 3 offers. We went to the blind auction, multiple offer scenario, all cash deal, phenomenal. Had a great outcome. The other 2 got 2 offers on one, but both lower than ask in week 1. I haven't seen that in a while. I mean, week 1, we typically, people don't submit those lower than ask offers. The third one is just not getting any attention at all. So, I've got two more listings coming out this coming week, and I think we're going to bump the pricing down on both because the market has changed. And if you're not priced exactly right, you just sit there, unfortunately. Now, Eric, let me ask you this. Rates coming down is one thing. What about consumer confidence? Because I think personally, consumer confidence is playing a lot into this as well. So even if rates come down, I think we still have to deal with consumer confidence.
Yeah, consumer confidence, I think, just in this entire broader scope of everything going on in the economy right now is extremely low. And it shows with the University of Michigan Consumer Confidence Index that they put out once a month. It shows in most of the major metrics. There is just a lot of angst and unknown. Very similar. I know you and I have talked about it offline. Feels like buyers are pulling out. They're just nervous with what's going to happen in this economy and with their own personal economy, right? What's going to happen with their jobs? What's going to happen with their investments? Different things like that. And again, this all leads to, you know, Warren Buffett said, like, the time to buy is when everyone else is selling, right? So the time to do that, the smart money is going in right now, realizing that, hey, there's some deals to be had. The timing to get in could be could be right now, to get out ahead of this because again, it's going to be a tipping point. It's going to go from slow, 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 and then there's going to be a mad dash. And if you're a seller, the tough part is you don't want to just keep your house on the market till that mad dash because again, at that point, it's been sitting for 90 days, 100 days, and no one's going to want it. If you can get in, you can price it right now. There's still opportunity out there. There's still buyers that if they feel like there's value there that are going to respond, but we're back into a market where value has to be there. It's not I need to get a house and I'm willing to pay whatever it is because if I don't overbid on this house, I mean, let's be honest, we've overpaid for houses probably for 3 years now, realistically. And the people that are willing to do that, they're out of the market. They've already bought a house. The people left in the market are the ones that want to see value. Want to and feel like they are doing well with their investment, that they're not throwing money away.
The ones that were willing to overpay they've already bought. So now
Yeah, yeah,
now we've
yeah, I
got
mean,
the
that's what it
buyers
comes
who
down
are
to,
just
right?
now we're just got the buyers left who are looking for the value. So the bottom line is, listen, the market is shifting in real time. We're watching it shift and not into a buyer's market by any means yet. I don't think a buyer's market is really coming, but we're definitely in a balanced market. Sellers can still win, but only if you price sharp ahead of the market and meet the buyers where they are. Again, buyers, you've got more options than you've had in years. In the last 4 years, this is your opportunity right now. But affordability is still going to be the wall that you're running into. If you can afford it, this is your time to strike. The bottom line is this is definitely not the frenzy of 2021. It's definitely not the 2008 crash either. It's simply a reset. So play it smart and you can still come out ahead.